Hello investors and traders, today I'll speak about three dividend stocks that pay you a nice dividends. So all of the three stocks are from healthcare sector, all of them of course dividend paying companies, and their dividend yield more than 2%. So let's start with the first company for today. It's CVS. Let's pay attention to its chart. Here we can see that last 2 years trading in a range, the range between 87 and 107. Here the technical analysis, the RSI momentum telling us that it's 37 now, this indicator, so now the stock is oversold. And by the way, the dividend yield about 3%. So CVS ended last year with its shares down nearly 16%. The stock hasn't gotten off to a great start this year, either tumbling close to 6%. Don't think for a second thought that CVS won't be able to mount a solid comeback. All three of CVS healthcare business segments continue to perform well. The pharmacy services segment, which includes the CVS Carmark Pharmacy Benefit Management Unit, is leading the way. CVS weakest segment is retail. LTC should be able to generate stronger growth with the company's plans to sell it. And of course term care pharmacy business. This stock also pays investors to wait for the bonus, and CVS dividend yield is about 3%, and the company has increased its dividend by the 21% over the last 2 years. Let's have a look on its fundamental parameters. Its total score is 86, very high mark. Its financial stability, we can see that debt to EBITDA ratio is 6, but interest coverage is 6.5. So it's severe because the cash to debt ratio also 1.3. So it's not the best financial position, but anyway, I think that now it won't be any problem with the dividend payment. The gross margin 17% and net margin only 1%. Not impressive figures, but anyway, let's have a look on the future projection. The NRI, it means EPS. Future 3-year EPS is about 8%, and the revenue for the future years also about 2%. The PE, the evaluation, PE is 37, but the forward is less than 10. So the forward PE is very cheap, and the PS is less than 1. So now I can tell that the stock is really evaluated cheap. And the dividend yield, we can see that dividend yield about 3%. Let's have a look on the second stock for today. Is Johnson & Johnson. So it's traded the last 2 years in increasing channel. Now we are traded in the lower border of this channel. It's 162. By the way, the momentum indicator is telling us that yes, the stock is oversold. Also a nice, it can be a nice point to buy it. Last time we saw such low momentum on the corona crisis. So anyway, it can be interesting. The prospects of a less aggressive stance by the Federal Reserve could hint that the US dollar will weaken somewhat this year. That would be a good news for Johnson & Johnson. Foreign exchange headwinds caused by the strong dollar made a big dent in the company's sales in the fourth quarter of last year. Investors also have a major milestone to look forward to later this year. J&J plans to spin off its consumer healthcare business. This unit has been a drag on growth in recent years. The spin-off will leave J&J with its faster growing pharmaceutical and medtech units. As was the case with CVS and J&J, dividend helps make any temporary pullbacks less painful. The company belongs to the group of stocks known as Dividend Kings, thanks to its 60 consecutive years of dividend increases. And if we'll check fundamental, look, the marginality of this stock of J&J decreasing, but look, it was 20% net margin, now it's 16, and the last figure is 15, so not so significant. The payout ratio is only 66%, so here there is a potential to increase the dividend payments, and of course the dividend yield about 3%. And by the way, the revenue is very stable. Look, all the last 5 quarters it was about 20 billion. Last 2 quarters 23, 24. So in my mind, very stable business. Good level to buy. Nice level from a technical standpoint of view to buy it on a support level. And by the way, of course, you can receive a nice dividends. And the last stock for today is United Health Group. Telling you the truth that I hold this stock in my portfolio for many years, but now it's out of my portfolio. Look, the chart. So last 3 years it was increasing channel. Now we are in the lower border of the channel. By the way, it's the same chart as looks very similar like J&J. So United Health, they are from one sector, so very looks very familiar, very similar. It's oversold. The weekly time frame their side is very low. So the company is probably best known for its health insurance business. I look for another year of solid growth from this unit, thanks its large part of rising Medicare Advantage membership. While United Health rank is one of the biggest healthcare insurers, the company Optum business is growing faster and more profitable than its insurance business. This stock dividend yield less than 2% probably won't fire up many investors. However, over the past 10 years, the company's dividend has boosted its total return from close to 700% to nearly 900%. And United Health Group is actually a better blue chip dividend stock than meets the eye. So let's have a look on fundamental parameters. PE now it's 22, very low payout ratio, only 30%. The revenue is stable. It's above 80 billion dollar per quarter, but the marginality low. All the last quarters it wasn't impressive. It was 6%, 5%. Now it looks like it's a huge decrease, but still profitable business. About 6% net profit margin. I think it's okay. And let's have a look on the PS ratio, price per share. So now it's 1.4. So I think it's not expensive at all. And the fundamental and the technical analysis tells me that United Health can be a nice stock to buy. For example, the potential of increasement is here the higher level. So in this case, the potential is about 25% up. So it was my three dividend stocks for today. If you like this video, if you like my channel, if you like dividend stocks, technical and fundamental market research, so press the like button. Don't forget to subscribe to my channel to receive all the updates, and see you on the next time. Bye.